Carlos Abadi is the Managing Director of Decision Boundaries LLC, a financial advisory firm focused on litigation support, financial restructuring, and financial engineering. His clients include the U.S. government, foreign governments, large corporations, leading law firms, and asset managers. As a 30-year veteran international investment banker who pioneered a number of financial products, such as the trading and swapping of emerging markets sovereign loans in the wake of 1982 Mexican debt crisis, the trading market for derivatives on emerging markets bonds and loans, the first non-dilutive CET1 transaction compliant with Basel III rules, and the first Chapter 11 filing for a Latin American issuer, Carlos contributes to Decision Boundaries' concrete transactional experience in addition to rigorous academic credentials. His academic credentials include a BSc MSc in Industrial Engineering from the University of Buenos Aires and MBA Finance from Cornell University, in addition to academic certifications in Financial Engineering, Columbia University, Data Science, Johns Hopkins University, and Machine Learning, Stanford University. In addition, Carlos holds the ABV professional certification from the AICPA and is a member of numerous professional associations, including ABI, ARRA, American Bar Association, International Association of Quantitative Finance, American Finance Association, Global Association of Risk Professionals, INSOL International, and several other relevant memberships in professional associations in the fields of economics, econometrics, engineering, mathematics, and data science. Carlos has been a guest lecturer at Columbia University, Harvard University, Cornell University, Sciences Po, INSEAD, and New York University. He is frequently quoted in the Financial Times, Bloomberg, the New York Times, Reuters, and other media. This program is brought to you by Prolific Solutions, Samuel Foundations. Joining me today on the Pioneers Only, Carlos Abadi. He is Manager Director of Samuel Foundation. Carlos, how are you?
Well, thank you, Maria.
My first question is, how do you see the economy in KSA at this moment?
The economy in KSA at this moment is very good. It has had one of the strongest post-COVID rebounds in its peer group of the G20. And it has been able to use very wisely many of the counter-cyclical buffers that are built into the Saudi economy during the pandemic itself. So there was no lasting damage to it. And now that oil prices rebounded, the economy is rebounding with it. There's absolutely everything is absolutely stellar with the Saudi economy right now. But one needs to think about the short and medium term because the planets are too well aligned right now.
My question is, the reinvention of the Saudi economy is going faster than planned. So this is about the leadership, or what are the factors around this?
I think that leadership has a lot to do with it. There are two factors. One, the reinvention has been very well, the leadership has been very well advised on the reinvention. This is not some kind of brainchild of a single leader, but a brainstorming exercise within all of the relevant centers of power germane to the Saudi economy, and backed by major international consulting firms, investment banking firms. The Saudi leadership has been very wise at getting input into Vision 2030 and has been extraordinarily dedicated to implemented that roadmap. So yes, it's leadership. Anybody can hire the best consultant in the world, but then you have to execute. That's the hard part.
What are the short-term prospects for the KSA economy?
Well, short-term, let's put short term between now and 2030, because that's the goal of Vision 2030. What I see is KSA is, in a sense, going ahead of the goals of Vision 230, and in other respects, falling a little bit behind. And, of course, there's no point in discussing those, that are mostly tourism related, entertainment related, and general economic opening related, where KSA is outperforming the benchmarks. But we have some others, like employment of skilled labor in the private sector, where they're lagging. Still the highest paying jobs in KSA are in the public sector, and it's hard for the private sector to attract the most talented individuals in the kingdom. So that is one, a shortfall. And the other one is, in part because of all of the counter-cyclical buffers that are so generous and the debt capacity that KSA has, it has not attracted as much foreign direct investment as one would have expected it to attract, given this pro-growth push it's going through.
Some analysts said the acceleration in fiscal consolidation will have positive consequences in the medium term, but an uncertain oil market outlook will continue to constrain economic reforms. Do you agree on that?
Well, let's not fool ourselves. By the way, fiscal consolidation has been fantastically executed. This year, KSA published enacted its first budget with a surplus since the 1990s, I believe. And so, that is why its fiscal position is now so comfortable. KSA has one of the lowest debt to GDP ratios in the developed world. It's about 32%. So, now the peer group average is about 100%. There's a lot of firepower there. Now, the not so good news are the still very high reliance on oil. You know the numbers. The numbers are 90% of export receipts are oil related, and 82% of tax receipts are oil related. Those are extremely, extremely high numbers, and they're precisely the numbers that the government under the leadership is trying to shift toward a diversification. But that diversification, yes, sorry.
Yeah, the IMF has most favorable outlook for the Saudi economy in 2021 compared to other organizations. So always the expectation of IMF are in the right direction. How do you think about it?
No, I think, I looked at the Article 4 consultation, and the Article 4 consultation outcome is very flattering of the Saudi economy. But remember, the Article 4 consultation is a backward-looking document. It just makes a critique of how the Saudi economy performed in 2021. And it's all commendable. Fiscal consolidation, strong growth, continued strength and liquidity of the banking market, decreasing unemployment. It's all been roses, but we're talking about a backward-looking document. What's interesting is to talk about the future, because as the previous document you cited, KSA economy continues to be hyper-reliant on hydrocarbon markets.
Talking about the future, what are the long-term prospects for the economy in Saudi Arabia?
Well, there's one direction that is very promising for long-term prospects, and that direction is that a big portion of the Vision 2030 budget allocation goes toward the educational sector. So Saudi Arabia clearly understands that it needs to develop itself into a knowledge economy, and it's doing it the right way. It's starting from its traditional sweet spot of the engineering sciences, where KSA has always been a leading education center, but it's radiating from the education sciences, for example, now into the biological sciences, medicine, etc., so as to position itself to be a technology hub that could start, let's say, from what would be natural for KSA would be the alternative energy space, given the amount of engineers and the knowledge it has about energy production, but then radiate that toward biomedical engineering and other kind of engineering sciences where KSA has traditionally been strong.
Mm-hmm. I have a question about Aramco putting its shares in the PIF, Public Investment Fund. What is the secret about this challenge?
Well, there's no secret. What they want is to ultimately increase the float of Aramco that's out in the market, because the more float there is in the market, the more Saudi Arabia can leverage that asset, which is the most valuable asset in the world. So how do you do that? You do that by floating a portion, like the 5% they already did, that sets a market capitalization, and by giving it to an entity like PIF, which
Saudi Crown Prince Mohammed bin Salman had transferred 4% of state-run oil giant Aramco to the Public Investment Fund.
Yeah, I know. There's 1% is still in the float, but this 4% that has been transferred can be levered, because now, since you have a free float, you have a market price, and those shares can be financeable. And they can finance PIF's investments in foreign countries. Remember, although Saudi Arabia has not been a huge magnet for incoming foreign direct investment, it has been a huge investor offshore, following the more or less disappointing experiments with agriculture at home in the 1990s, the leadership decided to change course and decided to invest in agricultural assets offshore to guarantee its food security. And you see, Saudi companies competing against Chinese companies and against Korean companies for agricultural properties offshore, each one with the same goal of guaranteeing its own production, but its food production. But that is feasible in part thanks to this additional firepower that PIF gets, which allows it to make foreign investments.
Mm-hmm. What is your opinion on what it said as the 2022 Outlook Capital Economics had the most positive forecast for the Saudi economy, saying it would jump by 7.3%?
In 2022, I think it's going to be very hard. That's the magnitude of the rebound we had post-COVID. I think that growth rate is not achievable. It's over-optimistic in my opinion. Mm-hmm. And certainly if it were achieved, it would be at the cost of some negative NPV investments. It would not be a good idea to try to grow at that rate after a year of 8.9% growth.
Mm-hmm. In general, how do you evaluate the position of Saudi Arabia between the other Arab countries or the Gulf countries economically wise?
Well, it is objectively the biggest economy in the Gulf. But, there's one neighbor who's the United Arab Emirates, who's not that far behind. And it's a much smaller neighbor. And I think that what the United Arab Emirates did is, with a far smaller population, it managed to implement the kind of vision that KSA is trying to implement for its own economy, with fewer logistical problems, fewer legacy issues from, a dormant period like KSA was in the 70s, etc., which left the economy a little over-bureaucratized. And the UAE is a smaller country, smaller population, and distributed decision-making, and managed to position itself as a knowledge economy hub.
Carlos, there is an article in The National. They said the UAE enjoyed a strong economy finish to 2021 with Expo 2020 Dubai and rebounding tourism boosting domestic demand. How do you feel about it?
Well, it's correct, but those are, let's say, two toppers over what was already a strong economy, an economy that was on the upswing. I don't think that Expo may have brought $25 billion to the economy, but it didn't make or break the year. The economy of UAE was strong because so many international investors decided to go into the UAE market.
Carlos Abadi, thank you for joining me on the Pioneers Only. You are the director of Samuel Foundation. Thank you again.
Thank you, Maria.
Hey, Maria Malouf here. Please click to like and subscribe to Maria Malouf TV YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.